Good morning, traders. Today we want to discuss Maxim integrated products and chart analysis. Maxim integrated products, incorporation stocks, and chart analysis. The stock that we're going to analyze today is an American stock that is listed on the NASDAQ 100. The EPIC is MXIM, Mike, X-ray, India, Mike. Okay, MXIM, Maxim Integrated Products Incorporation. Maxim Integrated Products Incorporation, an American stock in the group of the technologies. So when we are talking about a technology stock, the first thing that should come into our mind, is Apple stock and Google stock. So anytime you are trading a technology stock as a stock trader, you are also indirectly trading, Apple stock and Google stock. Those two stocks will influence other technology stocks. So we don't want to go around, repeating the same old trading mistake, because we are trading first the market, but we know that, inside the trading triangle, we have the market leaders, the economy news, and the fundamentals. But most importantly, the market leaders are the engine or the motors of the markets. So if they are going down, they pull the market down. If they are going down, they pull the market up. They are the heavyweights, so to speak, of the financial market. So in London, if you trade the FTSE 100, you must pay attention to the financials. The banks will propel the FTSE up and will push it down. All right, because London is considered as the center of the financial world. So you want to know what is moving, the market, and the market leaders are moving the market. So anytime you want to analyze a technology stock, you want to pay attention to the market leaders. So a very simple strategy is to see, are the market leaders bullish? Well, if the market leaders are bullish, we'll be focusing on our bullish watch list. If the market leaders are bearish, we will be focusing on our bearish watch list. Very simple. We don't want to fight the market, we just want to flow with it. Very simple. So what is in store for the Maxim Integrated Product Incorporation? But before we continue, I will tell you a little bit more about the Maxim Integrated Products company. If you are looking for solution for consumer electronics, Maxim Integrated Product is your candidate. They are involved in consumer electronics, personal computers and peripherals, mobile devices, wireless, and fiber communication. We are talking about the fastest broadband now, the fiber communication. So Maxim also is involved in fiber communication. The design also range of linear and mixed signal integrated circuits, referred to as analog circuits. So they have a sort of product, a technology product. They provide also what we call the broadband masts. So they are involved in the technology sector. But today we want to see what is in store for this stock. Talking about technical analysis, talking about chart analysis. If you want to know more about the Maxim Integrated Product Incorporation, go to Google Finance, put the EPIC MXIM, and you can read the whole day about Maxim stock. And so you can also discover the peers of Maxim company, other company in the same sector like Maxim. We don't have Broadcom, Linear Technology Corporation, we have Marvell, also Nvidia. Those are the company that appeals to Maxim Integrated Products. So for us as a technical trader and also as an investor, We want to buy stock and hold. We want to sell stock and hold. Did I say sell and hold? Yes, I did. All right. We shouldn't say that yes or no. No, we should be ready to sell and to buy. But the same people that are selling are the same people that are buying. So don't worry. Don't worry at all. They will come back and buy again if they sell it. Okay? So what is in store for integrated Maxim? All right? So we are on a yearly chart. In fact, I'm on a monthly chart. And we want to go a little bit into the past. In the past, we have this trend. So previous trend, a bullish trend for Maxim was good years. From 1994, in fact, yes, call it 1994, up to 2000. Very beautiful bullish trend was in place. Look at that. Gorgeous run. The stock went from a penny stock to almost $90. Let's see, is that level? Yes, up to $90. So if you purchase this stock in 1994 and hold on to it up to 2000, you'll be making 1,000% profit, isn't it? So here it is. But after that, so whenever you see a trending first, that is, a price trending like this, there are key levels that the professional, are mapping out. All right? So, which zone? We were talking about the Fibonacci sweet spot zone. Don't forget that. Anytime you see a financial instrument that went up like this and then start coming down, watch out for the level of 50% Fibonacci retracement level for this stock. Is at $45.85, call it $45. And the next one is somewhere around $33.72, call it 34. So professional are watching the 50% and the 61.8% Fibonacci retracement level of the prior trade. That's what we call the sweet spot zone. You want to understand how the stock market functions. So as the price start going down, so people start taking profit. So they were sowing, so to speak. They were buying and holding stock from 1994 up to 2000. Now the time has come for the harvest time. Understand that in the financial market, the bullish season is very important and the bearish season is also very important. Did I say the bearish season is also important? Yes. All right? Understand. The bearish season is so important. It's like the winter. All right, it's like the fall season when you see we have the spring, beautiful flowers, everything green and beautiful, your neighborhood so beautiful, and then come the summer, you see that the leaves are becoming yellow a little bit, and then in the fall season they start losing their leaves. They start losing their leaves. This is the harvest time, and then in the winter all the leaves are gone. They are naked. They return to zero. So the same thing happens in the stock market. And the stock that people are buying, they will not buy it forever. So they bought this stock from 1994 to 2000. And then come the harvest time, you know that we have the bubble, the technology bubble. So if you are in the financial market, you want to know, the season. So 2000 is what we call the technology bubbles. Push the market down. In 2007, we have the financial crisis. What will be the next one? There will be another one. So be aware of it. So the harvest came and people start selling. So if the financial instruments start coming down, professionals are watching the sweet spot zone, the sweet spot Fibonacci zone, the zone between the 50% and the 61.8% Fibonacci retracement. There will be buyers in that zone. As you can see here, all right, they see prior push it down very fast. Boom! Look at this. The first reaction. Stop in that zone. In that zone, this is the zone. You should pay attention to this zone. Where I put my green spot. All right, that's where it stop. And then it bounce up. When a little bit below, there's another level here. All right, the 78%. So whenever you see a bullish trend like this, higher than the 50% and the 61.8%, and most importantly, if the price couldn't start a new trend, usually some bullish stock will stop in this zone and begin a new trend. But most of the time, because of the smart money want to buy at the lowest price, at the discounted price, they usually prefer the 78% Fibonacci retracement level. So I do not use 78.6%. So I will always talk about 78% Fibonacci retracement level, but the correct Fibonacci retracement level is 78.6%. But you will hear me talking all the time about 78% because that's what I use. So highlight the 50%, the 61.8%, and the 78% level. So you can see that the price stopped here. You see, touch it here, bounce up, came back again, touch it again. You see, in that zone, here, as he went below to touch the 78% level, where the smart money very often will buy, what? Very often will buy, because that zone of 78% is considered as oversold. The financial instrument that was bullish, if it dropped down to the 78% level, if the fundamentals are still solid, okay, the competent management is still in place, or the innovative management is still in place, nothing has changed, but it's just the harvest stuff. You see the tree, you know, they lose their leaves, but their roots still is connected to the water. Everything, nothing has changed. They just lost their leaves. So you think the trees are about to die. They are not dying. They will survive the winter. The same thing is happening in financial instrument. Sometimes stock, nothing is, the product, the company, nothing has changed. But it just, we are in a harvest season. It's a bearish season. People want to sell for now. And you will go on YouTube, you will go on Twitter, people will say, oh, the evil, all right, sellers, the bears, they are just working for the buyers, because in fact, what we are calling bearish sellers are the same people that were buying it before. Okay, the hedge fund, the big financial institution, the pension firms, all right, all of them were buying the stock, they hold it. Now they are cashing out because they see that it's coming down. Everybody's cashing out, all right, and they will buy it again. And they usually prefer to buy at 78% Fibonacci retracement level. But understand something. The smartest investors always like my favorite chart pattern. Do you know my favorite chart pattern? Double bottom and double top. All right. So the smartest investor, they prefer the 100% retracement. So apart from the 78%, some investor will demand that the stock go back to the beginning completely. In fact, that's good because there's no more room for the price to go down. All right. There's no more room for it to go down. The only way is up. All right. But one more thing, as we are talking about the Maxim integrated product, I have more to say, so I always encourage you to watch the full length of our tutorial, because what I'm doing, I'm going deeper and deeper. So soon I'll be talking about market geometry. I'll be highlighting other key levels. So I encourage you to watch the full length of this tutorial. And if you do not have enough time now, okay, watch it bit by bit. Like this morning, I was watching one video. I watched half of it, all right? So I leave it. And later on, I go on my smartphone. Google will highlight where I stopped before. And I just continue. Very nice, isn't it? So I don't have to watch the full length straight away. I can watch the video bit by bit and consume it completely. One thing I will tell you now, as we are talking as a friend, all right? If a French family invites you, all right? French family invites you. All right, they like people who eat and finish their plate. All right, finish and racler it, racler complètement. All right, so they like that because they think that, oh, you appreciate the food is good quality, you know. But if you go to somebody, they invite you to cook, they spend their time cooking nice food for you. All right, and you just eat it a bit and say, I'm full, just to show that, okay, I don't eat very much. They can get upset. They may be smiling, but they will not be happy. They will say, look at this man. All the time we spend, look at the way he eat the food. If you leave, they will talk behind you and say, how come this guy will cook this quality food and he just play with the food? Maybe he didn't like it, all right? And the same thing is happening on YouTube. YouTube creators spend their time to create quality products. They put it on YouTube. They want to see thumbs up, thumbs down, doesn't matter. Thumbs up, thumbs down, all right? Bit of comment. Oh, your voice sounds like a frog or something like that, all right? John, what's wrong with you this morning? You are a bit too excited. Some comment like that. That is a friendly comment, okay? So a bit of interaction so they may see what's going on. So you may say to me, John, what's the point? The point is that there are quality videos out there, but there are quality information out there that people are just missing them. They are just wasting those quality information. And I encourage people to consume those information in full. Free education for free. Now, this video is not about the free education. Let's go back to Maxim. So I say to you, higher than the 50%, the 61.8%, and the 78%. The good news, whenever you see a financial instrument, okay, remember this, and it did below the 78% Fibonacci retracement level, all right, which is very, very good. I like that. It did below it, all right. And it quickly, and then slowly but gradually, it returned above. You see here, this is the 78% Fibonacci retracement level for Maxim, which is at $20. The stock went below that level. So in fact, it went to 88.6% Fibonacci retracement level. All right. But I don't want to talk about 88.6% because I use 78%. So I'm watching 78% Fibonacci retracement level. So as it did below it, which is good. All right. So a lot of people think that you see here, stop on it exactly. Whenever somebody gives you a key level, all right, the best thing that you want is the price you want to buy. It's nicer for the price to go below the key level. You don't want it to stop on it. But when we see a lot of traders will try to buy exactly on that level. No. Allow it to go below it, which means it's testing whether there is a demand to sell below. So what is happening here? It went below it to see whether there is a demand. There was a bit of demand. But later on, the price formed a higher low here. So which is indicating to us that people are not very enthusiastic to sell it. The bear are getting tired. So they sold it, they milk it, as they say, they milk it for many years. Now they say, all right, there's no more juice in it. Let it go. All right? And the stock is now free. There's no more bearish pressure, and the stock will go up. You see, since 2009, you see, 2009 is just flowing gently. It's a bit wounded stock, so to speak, because the bear were quite here for some time, since 2000 to 2009, almost 2008. So they were here for 9 years, and there you can see that the stock is struggling to quickly run away. But there is a future for this stock, looking at the technology sector itself, all right? Especially when we look at the fiber technology, fiber communication right now, this is the future for the broadband fiber communication. So myself personally, using computers, what I do care about is the speed. I want to click, I want to go. I don't want to spend. You see, you do everything, you lose in 1 minute. So if you lose 60 minutes on every click, you lost 1 hour, all right? So time is so precious. So when we are talking about communication using computers, fiber communication is the future. And there is a brighter future for Maxim integrated product. And you want things to go fast. We want computers to go fast. You want things to be fast. So for me, I changed from, okay, I don't want to mention name now, from one mobile phone to another just because of the speed. All right. So Maxim integrated provide fiber communication products. All right. So we are looking at a company that has a future. So talking about quality stock, it's very important that the stock has a future. If the stock has no future, you can have excellent product today, all right? Excellent management in place today, gaining more market share, all right? But if you do not have a future, if the company does not have a future, that's it. The smart investor cannot invest in that company. So looking at this now, you can see that it did below the 78% level, which is good. And then you return above it. Look at this, my friend. Look at this beautiful setup here. It did below the 78% and then breaks above and retests. GSGW SY008 will implement a top-down trading method here to trade it. Boom, up. So now we have this bullish trend line where the professionals are buying. So for traders, day traders, swing traders, so there is a channel, all right? There's a channel. So how did I draw this channel? So you can do the same thing on your chart. I connect this low and this one here. And I draw my first line, and I just choose one point here, this top here, and draw another line that is parallel to the first line. There is also, whenever we draw a channel, we want to pay attention to what? The median line. If you don't want to draw it, be aware of the median line. So, for bullish traders that are trying to trade against the market, why did I say that? Because the S&P 500 is now in the fifth area wave. But there are traders who want to buy. So, from today, remember, if you are buying, it's a contra trend, all right? So it's a contra trend. I'm not saying that one cannot buy, all right? But just know that whenever we are buying at this stage, it's a contra trend, and we need to be, okay, smart. We need to be careful, all right? That's all, all right? Doesn't mean you cannot buy. You can buy, but be gentle. So for this stock, trader who want to look for an opportunity to buy or bullish trading setup, the bullish trading setup will occur on the edge of this channel. That's it. That's where, so when you drop it down here, bullish traders will use top-down trading method to push it up to the top of the channel. Though we have a rising channel, the price is consolidating in a rising channel. So you can see it's a bit a slow move because the stock has been under bearish pressure for too long, and investors struggle to cope with it, because what is usually happening, you have to understand that, is that this is what we are saying, technical traders have more advantage on over fundamental trading, talking about the timing of the market. So a lot of investors will buy stock at any price, which is crazy, at any price, and at, okay, any time. So they want to buy, they don't know how to sell. Most investors do not know how to sell. Talking about shorting stock, sell. Okay, they don't know how to sell. Professionals know how to sell stock and make money selling stock. Now, because of that, those investors with different investment account have the money. Okay, so they want to put it in the stock market and they want to make money. But the problem that they are facing, they don't understand first the market participant, how they think, and they don't understand the stock market, how it functions. Therefore, they buy at the wrong time and also at the wrong price. All right. So, therefore, as this stock was bullish before, everybody was buying. Okay. So probably some people bought it at the top here, at the time when the stock was about to go down. So they say, don't worry, a few years later, it will bounce up. And then after 5 years, the stock didn't go up much, and they take their loss, they go, they don't forget. And other people may buy at a different price, and they also buy at the wrong time, and they lose. But they didn't time their investment carefully. But because of that, they have difficulties to believe in the future of the company. But it's nothing wrong with the company itself. All right? It's nothing wrong with the company itself. It's just the timing of the investment. So therefore, what we are seeing here is a bit of investor dragging their legs. Should we buy? Should we not buy? Should we believe in this one now or not? All right? But remember what I said to you. Anytime that you want to invest or trade, all right, so for ordinary investor, all I will say to you, the best time to buy and hold stocks, all right, is when the market, we are talking about the S&P 500, is turning from bearish to bullish. All right, so it has been bearish for some time. The market S&P 500 now is turning from bearish to bullish. You see this stock here was going down. Look, it did below that critical 78% Fibonacci retracement level and display a gorgeous, look at that. Spend some time to admire the beauty of this inverted head and shoulder chart pattern that is a bit tricky. Why this one is a bit tricky, this inverted head and shoulder chart pattern? Look at this one. This inverted head and shoulder chart pattern, I'm saying that it's a little bit tricky one. Why? Look at that. Okay. You see the channel? We don't want the right hand side shoulder to be inside the declining channel. Alright, you see there is a declining channel, but the right hand side shoulder is a little bit inside the channel. We want it to be outside the channel. But it survived, okay? But you want to know that this one is a little bit tricky, alright? Okay? So the inverted head and shoulder chart pattern usually form at the end of a downtrend, indicating to us that, okay, the bearish momentum is diminishing. But this inverted head and shoulder chart pattern is being formed at the right time and also at the right place because we are below the 78% level. In 2009, exactly, the S&P 500 was turning from bearish to bullish. You will also notice that at the time when the market, talking about the S&P 500, is about to turn from bearish to bullish, watch the Federal Reserve. Usually they will come out with a policy to force the market to change direction. Watch the decision that are made by the Federal Reserve. It's critical. And you can time the market, see, or another way to put it to you, know where the money is going. All right? Know where the money is going. If you know where the money is going, you will know what is going on. All right? Know where the money is going. Okay? Just follow the money. Where are they putting the money? And then go there. You will know exactly what's going on. All right? Okay? So here we are. So this is a good one. So talking about this technical analysis and Maxim integrated product, the stock is consolidating in a rising channel, which is very interesting. So if you want to buy it, you want it to look for an opportunity to buy at the safest place on the edge of this point here. All right, that will be a better place. You see here, it touches here, it bounces up. It touches here, it bounces up. It touches here, it bounces up. When it touches it, doesn't mean buy straight away. Implement a top-down trading method to trade. If there is no signal, don't force it. So where is this stock going? So I've been talking to you now for some time, and I say to you, as we are going forward, I will go deeper and deeper. So where is this stock going? So this stock, this integrated Maxim integrated product is going somewhere. Where? It's going here. I will show you in a minute. It's going here. It's going into this zone. Okay. The level of $55 and $45. That's where it's going. This is where it's going. Well, how do I know? That's a very good question. All right. So how do I know? Because here it is. You see this move here. Watch this level here. There's nothing new in the on this earth. What has happened before is likely to happen again. So here you can see that the price bounced in this zone before. You see here, it bounced here before. Yes or no? It bounced up here, come down. Here it is again. It bounced here. Okay, and then so first time you see they start bouncing to this zone. The bearish traders sold it. It went down a bit to the 78% level and returned back again to the same point. Bearish traders say, what? Are you trying to go up? We want to sell. And then we are not finished yet with you. Now they push it and they sold it more and it went below the 78% level where they wanted to go. And now they are satisfied. They are out. Now the bullish traders start taking it. The bullish trader want to bring it where? Into this zone. Watch the 45 and the 55, so exact level 45.85 and 55.88. So you may say, call it 46 and call this one 56. This zone, that's where the stock is going up to. All right, but it's doing it carefully in this channel. But remember what I said to you at the beginning of this tutorial. All right, watch the S&P 500. So at the time when you're about to buy the stock, all right, for day trading, swing trading, all right, watch the S&P 500, all right. If the S&P 500 is bearish, okay, keep your fingers crossed, your arms crossed, and your leg crossed, your hair also crossed. Can you do that? Okay, let's move on. Okay. So understand that we are trading first the market. That's what I meant by that. So we are heading into the zone between $45.85 and the zone 55.86. When it reaches that level, all right, which it will find a bit difficult to do if the S&P 500 start coming down, okay, it will find it difficult, which is a bit of unfairness toward this stock. But we will see. All right? That will be unfair because it will be better for this stock to continue to go into that zone first before we will prefer, if we reach that zone between $45.85 and $55.88, then we will prefer it to come back down a little bit. Did I say that? Yes. We will prefer it to come down a little bit into this zone. Boom. Near the median line of my first horizontal red channel. Can you see the red channel here? That's what we will prefer. So it's heading to the zone of $55.88. And after that, we will prefer it to come down a little bit, even up to $27, which is okay. Which is okay. Am I saying to people to sell? No, I'm not saying to people to sell. There is a pattern that is likely to form. It's a Fibonacci pattern, and that pattern is the bat pattern. All right? It's a bat pattern. So, therefore, in my view, this stock has a high chance to continue to go up to $55.88 if the market allows it, because if the market is bearish, you will struggle to get there. And then after that, because of what has happened before here, so the bearish sellers that were here, do not forget where they sold it before. Remember, the smart money will sell at a specific price. So, they will try to sell it again. No worry. But this time, what they are doing is not truly to sell. They want to buy at a cheaper price. So, it's okay. It's okay. For the stock, hold on a second. Traders, I'll be back in a minute. All right, so it will be better for it to pull back to the $27 zone before, okay, another bullish leg up. That bullish leg, we need to watch another zone here, which I'm going to tell you in a minute. If I apply my Fibonacci retracement to this price action down here. Yes, I'm looking for, hold on please traders. Okay, hold on please. We are looking for the 88% Fibonacci retracement level of this move from here down to this level here. And we must watch this level, this price action here. I'll put it right there into red, the level of $80. That's the ultimate bullish target. So our expectation is that this stock should normally reach the zone of $55.88, between $45.85 and $55.88, and then after that to gently, in an orderly manner, all right, this is not bearish, so probably S&P 500 will start pulling back a bit, all right, and then this stock also will come back down because the bearish sellers are no more willing to sell this stock as such, all right. So this move down is just the reaction of those who bought this stock, all right, or some investor that did not sell it all this time. They would like to come out. There will be a bit of profit taking at this point in time. If you reach this level of $55.88, there will be a kind of profit taking, but it's not this is not a selling activity as such, because the stock is due to go up. So therefore, there will be this orderly move down. Probably it may not reach the $27, it may stop at $23, but there will be a kind of pullback before it will start going up for good, breaking above that critical $55.86 level. All right. So one thing you need to understand, there is this level, $45. That will be the first resistance. So now it's approaching that level. The price now $39.20. When it comes near the $45.85, is a resistance zone. There will be sellers there. So that's therefore the price may pull back a bit like this and then go and touch for the first time. If it touches the 45.85 for the first time, day trader can look for opportunity to sell using a top-down trading method. There will be some reaction to sell in that zone. All right. And after that, we may see it slowly but gradually. It will try to go a little bit up near the $45.88. That will be a normal, okay, market. But remember, if the S&P 500 becomes truly bearish, you can forget any bullish progression. All right. Remember this. I need to say this 100 times so you may get that we understand we are trading first the market before anything else. All right. And we are also watching the market leaders, which I mentioned at the beginning of this tutorial. In fact, this tutorial is for traders that want to improve their stock, technical analysis, all right? Because a lot of people trade stock, but they don't know how the stock market function, who are the market participants, the dominant force in the financial market. You need to know, all right? So, another progression. So first resistance $45.85. Okay, we will prefer it to go all the way. That would be better to go to $55.88 before we want to see another pullback somewhere between $33.72 and $27.18 before we push it to $80 zone. All right, at $80 zone there will be a bit of profit taking again. Will it bring it back to 45 again, and so on and so on. All right, so this is what we see for this stock at this point in time. All right, so right now, professionals are selling on the edge of this rising channel. That's what I say to you, is consolidating in this rising channel. Each time it reaches the top of the channel, people are selling, and each time it reaches the lower part of the channel, people are buying. So it's gently going up slowly with a low volatility, but there is a resistance of $45.85. We will prefer it to find a resistance a little bit, and then but slowly to push it back up to $55.88, where we will expect, all right, another pullback. But our expectation is not what the price will do, all right, which means the reason why we will want it to come back here, it will form, okay, in that zone, a kind of a double bottom in relation to this low here. Okay, you see this low here, this low in relation to this low here, and that will satisfy the market, and we will have, when it did that, we will have a beautiful bigger, okay, you see now, can you see? That's why I said you do not blink, all right? We will have a beautiful, a bigger, inverted head and shoulder chart pattern. So this will be our, okay, left-hand side shoulder. This will be our, the head of this integrated, Maxim integrated product. And this will be, okay, the right-hand side shoulder. And from there, we will push it up. There is one more thing. Did I say to you, I go a little bit deeper and deeper and deeper? Yes. All right. Stay with me. Here we are. There's a channel here that I want you to pay attention to. All right. So because I want to map it out so you may know exactly what is happening here. So you can see I was telling you that the stock did below the 78% Fibonacci retracement level of the prior trend. Yes or no? I did. Okay. But then that's the red line here. Okay. As it dipped below it, it formed that inverted head and shoulder chart. You remember the smaller one that I was showing you before? This is the left hand side, this is the right hand side, this is the left hand side shoulder, this is the right hand side shoulder, this is the head. Remember that, okay? So how do we trade the inverted head and shoulder chart pattern? We measure, okay, the depth of the inverted head and shoulder chart pattern. So the depth of that initial inverted head and shoulder pattern is this one. You see my measuring stick. This is the depth of that inverted head and shoulder chart pattern. So professional will use that also to set target to trade this Maxim integrated product. So the first projection above the neckline is bringing us to the price level of $33.72. You see now the price breaks. You see how here? This is another professional. See how it breaks above that target level? Boom, retest it, and now it's pushing it up to the next target. So where is the next target? The next target, we project it again above that first projection, bringing us near the level of $45.85. That $45.85 is also the 50% Fibonacci retracement level. You see that zone of 50% Fibonacci retracement level of the prior trend. Okay, you see now, that's the 50% Fibonacci retracement level of the prior trend. But it's also corresponding to the projection of the first channel, you see, the depth of our inverted hydrogen pattern. We are projecting it. And the third, the second projection is bringing us to the 50% Fibonacci retracement. So professionals that are using the depth of this inverted hydrogen pattern, chart pattern, all right, are watching the level of $45.85 by projecting that width for one more time, without distorting, unless it's still correct, yes, without distorting that width before it's so important for us. We have now another key level, $55.88. You see now? Those key levels are very important, all right? Very important key levels. And when we project it one more time, using market geometry, having said that, we'll talk about market geometry, the projection of horizontal channel or rising channel or declining channel is what we call market geometry. And that will bring us again to this price level. There's another price level here before, so you may map out the chart, talking about chart analysis of Maxim integrated product. We are analyzing the chart of this stock on a monthly chart using market geometry, all right, Fibonacci, key levels, all right. So here we are, by projecting one more time, we have the level of $69.97, and one more time bring us into the zone of $80. So remember the depth of this inverted hydrogen pattern, we can use it to map out the chart. So there are key levels that professionals are watching, $33.72, all right, $45.85, $55.88, $69.97, $80 zone. All right, but right now the stock is consolidating this rising channel. We will prefer it. We will find the first resistance at $45.85, a bit of pushback back to the lower part of the channel will be great before pushing it to the 55.88, where we will expect another pullback, all the way into the zone of $27, $33 zone, all right? And after that, if the market environment allows it, very important, market first, we may see the stock pushing it to the $80 level. That remains to be seen, all right? We can also project, here we are, we project first the depth of the inverted hydrogen pattern, talking about market geometry or chart analysis, all right? We can also use, the width of this rising channel, and we can also project that channel. So in this case, we are not projecting, horizontal channel, we are projecting a rising channel in the direction of the price. So that will be my first projection. And the second one, this one, and we can do that, on our chart, because we are free to draw on our own chart, yes or no. And with those lines, we can pinpoint, the hot spot trading zone and make excellent decisions like the professional traders. Will you find this useful? All right, let us know in the comment section, all right. So this is it. So very simple. The stock right now, where is it going? It's going to the zone of $45.85 and to $55.88. That's where it's going. How is it going there? It's going up in a rising channel, consolidating in a rising channel. Where is the first resistance? $45.85. That's the green line on my chart. After that, there is another resistance at $55.88, which we must watch. If it reaches that zone, there is a high chance that there will be another pullback into the zone of $33 to $27 zone before the stock will push it up to $80. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the STWSYS008 traders talking about Maxim integrated product and chart analysis. Happy trading to you all, and speak to you soon.